Yesterday, Canada avoided a 25% tariff on its exports to the U.S., and that helped to push the dollar Canada back to the downside after reaching the highest level going back to early 2003 to be exact. The move to the downside has taken the price back into a familiar red box. You remember that? I'll talk about it in this video, so let's get started. Remember this, a red box. This red box defined the trading range, or most of the trading range, going all the way back to around December 17th. Yes, we had times where the price moved outside of the red box through the inauguration volatility through here and tariff chatter. But last week the price moved above the red box in, again, tariff volatility, and all this is the same type thing. Of course, in trading yesterday, we gapped to the upside with the 25% tariff announcement over the weekend, but then things started to unravel. We started to move back below levels like the 1.4660 level. That level, if we go to the monthly chart, was the high price going back to 2020. So we moved back below that level right through here. And trade above and below it for a little bit before the final news that the tariffs would be given a 30-day reprieve, and that sent the price down below the 50% of the move up from Friday's low to the high price that we saw in yesterday's trade. We stayed below that 50% retracement level right through here, and that was good news, and or right here, I should say, in trading here today, and then rotated all the way back down, nearly erasing all the gains from Friday's low to the high price that we saw in trading yesterday, before rebounding back to the upside. The corrective move to the upside took the price back up to the 100-hour moving average, where we found willing sellers against that level, and then I'll re-put the red box in here. The price moved back into the red box through here, and we haven't seen that area retested again. Instead, we're seeing the 200-hour moving average become new resistance at 1.44381. Stay below that level is close resistance now for this pair. If we do break above that level, we'll look for a move back above the 1.4466 level outside the red box. But as long as we stay below this level, then the bias remains more to the downside, and we can look toward the low price that we saw in trading yesterday. Off of the big, huge decline into the close. And then we start to look toward the, things like the low price from Friday at 1.4367 level. 1.4348 level is a swing level going back in time through this red area and red box area. And then we start to look toward the low of the red box, which comes in at between 1.4290 and 1.4304. So what can go wrong? Well, anything. First of all, you have to remember that in 1 month's time, we're going to have another go at this, where there'll be all sorts of chatter and talk about whether or not what Canada did was successful or unsuccessful. And then we also have Trump thinking about the revenue side to pay for things like tax cuts in his agenda. That revenue side, he said, is likely to come, or one of the areas where it comes from is tariffs. He looks at that as a revenue source for paying for tax cuts. We'll see how all this pans out, but we're not out of the woods yet, but we're back into familiar area here in the dollar versus Canada. We'll see if the price can start to remain in that area and redo it again about this time next month. My name is Greg Mikulowski with this technical look at the dollar versus Canada. Good fortune with your trading. Bye-bye now.